afternoon, everybody. It is Friday, the, hell if I know what day it is. I'm going to say it's the 15th of July today, halfway through the month of July. Hopefully you had a good trading session out there. We had a nice little bullish move as we were thinking we were going to have it on yesterday's show. And lo and behold, we got that one today. So I'll walk through that and go through our top 7 markets and some of the major economic news that happened. Shout out to Brendan, who's joining us today. Look at that. Brendan is actually back. What happened? Here you are. You're back again. Anyway, good to see everybody with us today. Cheers. It's a Bib and Tucker kind of day. The fair officially opened here in Southern California, so it's going to be a fun night tonight going to see Cool and the Gang and others. Oh, that was a good sip. Let's dive right in. Of course, the graphic I have here, try to do something with the trading week wrap-up that's kind of standard with me and my glass of whiskey there, but I also wanted to put the retail sales tease in there as well. Big sale. We had some nice numbers happening with retail sales today, so let's start with economic announcements and earnings for today. Yesterday we had Morgan Stanley and JP Morgan report their earnings, and they weren't great. They missed their expectations, they had revenue declines, and they actually were citing some pretty tough times ahead for our market. So I thought that was very interesting yesterday. Today, we got a different story. Notice Citigroup beat earnings, had a really nice pop to the upside of 13%. Wells Fargo missed their earnings, but I think they got caught up in the excitement overall of the market and had a 6% gain on the day. But you notice you have Progressive, you got BlackRock, US Bancorp, PNC Financial, Bank of New York, all doing pretty well. The only one that missed there was BlackRock, which missed pretty handily on their earnings and was still up 1.78%. So all in all, a pretty good day for the equity markets. Certainly that helped fuel the rally. But was there some economic data that may have helped it as well? I'm starting here because I think that this is extremely important, especially as we look at a potential turnaround for the markets. I know everybody is screaming bearish, 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 but it's starting to show some signs of improvement. The major piece here today was this retail sales number. So let me highlight that bad boy right there. I hate my drawing tools. The previous month, we had a contraction in retail sales of negative 0.1, so obviously not good. The expectations were that we were going to see some spending coming in to the tune of 0.9%. We actually beat that, so this was a nice plus for the market to start off the day, showing not only strength, but when we take out vehicles, it was even stronger gain. That's this core retail sales right above it. So that great news for anybody who's looking for a long relief rally here. Right below that is one that I kind of addressed yesterday, this Empire State Manufacturing Index. Again, looking at it from a dominoes effect, if you have one piece of the economy start to slow down and look really bad, that obviously can have ramifications for other parts of the market, and things can start to drift down lower. So for example, if we saw retail sales numbers come in horribly, then eyes would focus on which companies have the worst retail sales. And then the expectation would be impending layoffs if they continue to do poorly. Well, the retail sales number may have, calmed some of those fears of heavy layoffs in the retail sector because there was definitely spending going on. Well, from the manufacturing perspective, this is very good. Now, it's not a great number. Having a positive 11 is not like showing huge expansion. But what's noteworthy is the expectation, as you can see over here on the right-hand side, was for a contraction of negative 2.1 for the Empire State Manufacturing Index, basically saying that people were expecting more economic slowdown in the Empire State area. Well, lo and behold, we came out at an 11.2, which tells you that business owners and managers in the manufacturing area are feeling somewhat optimistic, which is a good sign for a potential market move up here. Now, we could run down this list and see even more. Industrial production was worse than expected. University of Michigan consumer sentiment was slightly higher, but I am very good, Gallo. Hope you're doing well, great as well. So all in all, pretty damn good for the U.S. markets in today's session. So let's go back to what we were looking at yesterday, which was these major indexes. I'll start at the bottom and work my way up. Actually, no, I'm going to start with the S&P just because I want to start there today. We have this great follow-through for anybody who's trading the futures here. Beautiful move up. Again, we had everything kind of fell in line with expectations of what we talked about in yesterday's show. Unfortunately, it didn't work for the SPY, which is what I was looking at this morning, so didn't quite get all of this move, but got some of it. What do I mean? Well, here's our horizontal line that we had on the high of yesterday's candle when we did this show, right? So my rule that you guys probably have learned by now on a hammer formation like this, or this is called a dragonfly doji, is I want it to open up down below this red line right here. And if it rips above it, that's your buy entry. And you'll notice that happened last night. I'll go put a 5-minute chart on here. And you can see that well, I guess not last night, wee hours of the morning, we ripped through that multiple times, right? We actually sold back below it and then came above, and then all of a sudden it was off to the races. So a pretty nice follow-through rally there. Of course, it actually broke above it back here, right? We had after we did the show yesterday, it actually did go above 38.06, then it drifted back down. So there was definitely some jogging back and forth above and below this line, but the big break happened right near the morning on some of this economic data. If anyone is not bullish on crypto, I'm sorry, not going to make it. Well, we can have a debate here. Let's get through the markets, and I can throw my 2 cents on that, Brendan. There's definitely reasons to be bearish on crypto, but there's also a lot of reasons to be bullish. So it can't be overly one-sided. But we'll look at the crypto markets here in just a little bit. Yeah, JP Morgan as well. Yeah, that was a good one. You had that, look at that follow through. I mean, this was awesome. Sold off and then ripped up. And again, that was based off of what? It was based off of this candle formation we had yesterday, right? Dragonfly Doji. And that kind of leads you to a potential move to the upside. And also, we talked about this gap fill. So hopefully some of you grabbed on that one today. Awesome. Right, good for you. I'm glad some of you pulled some money out of there. Let's see. I'm going to go start at the bottom now. Gold. I did not pull the trigger on gold today. I'm looking to be selling some puts and generate some premium, and I really should have done it today and carried that over the weekend. You can see I've got my demand zone down here right around 1673. So if I could sell 167 GLD puts, I would probably be happy doing that. I just didn't get around to it today, so unfortunately did not make that trade, which I am wanting to make badly. Gold is pretty much unchanged on the day. So here we have what's called a spinning top. Some might call this a doji, where it opened and closed right around the same price for gold today. Nothing really exciting there on the gold front. Moving up, we do have Bitcoin, which, granted, I love to see a 1.43% move. However, we're still sideways, right? Until we get out of this range we've been in for better part of a month, I have no bullish or bearish sentiment on it. It is just, for me, right here, just going sideways. I'll keep that box there. So until we get above that, I have no reason to be optimistic or bullish. Reason, as I pointed out yesterday, if trend is any indication and past performance is any indication, you'll notice that we have sell-off, sideways, sell-off, sideways, sell-off, sideways. Hey, if patterns are there, then statistically we should see another sell-off here. So no reason for me to get bullish yet until we get above. Let's move this line down here. In my opinion, roughly, if we can get above 23,000, then I think you're really going to start to see some upside movement. But right now, there's so much negative sentiment in the crypto space. That pressure is certainly pushing down, and we still haven't seen all the liquidations for these bankruptcies from Three Arrows Capital, Celsius, Voyager, and other companies out there. That still has yet to be fully settled. Once that's done, then I think crypto does have a nice move to the upside, but we still have a ways to go before that's filtered out. So right now, just with Bitcoin alone, I guess I could look at the other 20+ thousand cryptos, but we'll just stay with Bitcoin. Sideways action, boring for now. We'll check out Ethereum maybe a little bit later on, but right now, sideways and boring is where it's at. Crude oil, 1.88% to the upside. That also had a giant hammer formation yesterday and a slight follow-through. Nothing overly dramatic here with crude oil. Again, 1.87 right now. I know it's not the official numbers, but I like to do it live as the show goes on. Then we get to our indexes. Nice follow-through on those hammer formations on every one of these indexes, guys. NASDAQ was up 1.88% to close out the week. Nice bullish move there, finishing at 12,019. Still, in my opinion, this isn't it was a cup and handle, right? If I look here, to me, that was a cup and handle. Now, all of a sudden, it looks more like an ascending triangle. What I'll do is I will draw a line across the bottom here to kind of paint a clearer picture. And roughly through there is where I see that ascending triangle. So, we can see it go back up to this 12,250, sell off a little bit, but ultimately, the more times that it hits this head on 12,250 and makes higher lows, the stronger this is going to be for the equity market. So all in all, pretty darn good move today. We like that. S&P had a very similar picture, a better follow-through in my opinion, right? You can see you had a real big rip up here today, 1.94% for the S&P 500. Again, beautiful hammer formation. I hope some of you traded that one. Here you have the Russell 2000, which is up 2.10% on the session. Not as pretty of a picture, in my opinion, as the NQ or the ES, but nonetheless, it is looking like a more positive move to the upside here in the coming days and weeks. And finally, the lead dog. I hate to even say the Dow was the lead dog, but it was 2.14% to the upside for the Dow, coming off that really ugly down day yesterday. Yesterday, we were huge red candle and then finished with a small little red body hammer formation. Great follow through today. So anybody who follows the way that I trade hammers and patterns like that, you did pretty darn good today. Yep, Brendan graced us with his presence. Let's see. Real quick, let me just catch up with Brendan because you're flooding me with comments. It's hard to read. 13,000 Bitcoin is less than a 50% away from here. 100,000 is 5x. That's at least 10x reward to the risk it lives. Plus adoption hasn't slowed down. Yeah, I mean, look, I'm not saying that crypto's not going to go up. I'm saying that the probability right now is that we're seeing crypto continue down simply because the trend is in that direction, regardless of our look. I'm probably more bullish on crypto than you are, Brendan. I am absolutely a Bitcoin crypto fanatic for the long term, but not all projects. I think a lot of them are scams. Most of them are actually scams and pump and dump garbage. Bitcoin, I'm a huge fan of Ethereum and some of these other layer one chain solutions. Awesome. But this trend right now, since November of last year, can't argue it. Irrefutable downtrend. And whatever reason that is, and we could point the finger at a lot of different things, in my opinion, that's going to continue until it doesn't. And if you look at the 4-year cycle, Bitcoin should be at roughly 10,000. Now, if it gets there, great. Load up, buy some more. That's for sure. And I would be buying the dips. I am absolutely buying the dips. All right, so that's the top 7 to start. I mentioned the retail sales numbers, which, of course, I think is the catalyst for what we saw today, plus those good earnings from some of the banks. I will go through a few lists or questions here, which were sent in. Of course, you guys can always send in questions at TraderMerlin@gmail.com or put those down below the YouTube video at any time, and I answer those ones usually first on the program. So cheers to those of you who sent in questions. Oh yeah, 6-year-old bourbon today. That's the tasty one. I'm gonna take a step back from just market behavior and just make sure I get through these questions because sometimes I get excited and I forget to get through them all. But Chris B, hopefully you're watching today, he says I went through OT about 10 years ago and they were all about TradeStation, so I ended up getting an account with them. First, let me just real quickly say why that is. In order to have a school where you can actually trade live and with real-time data and real money, you had to have accounts there. And so there weren't a lot of companies that were willing to do that. TradeStation was one at the time that said, sure, we'll open up all these accounts. And mind you, at the time we had like 50 centers. Each center had at least one classroom with 20 computers. Some like Irvine have like 5 classrooms with 25 to 30 computers. So those are a lot of accounts. So TradeStation really did a great thing by opening up hundreds of accounts, allowing students to trade live with real money of OTA's money. Now, was it that TradeStation was the only option? No. I mean, obviously, we needed a platform to teach on. And actually, in my opinion, TradeStation is probably too complex for somebody just starting out. There's too many features, bells and whistles, very akin to Thinkorswim, right? There's so many features that the average newbie is going to their eyes are going to spin back in their head because it's so overwhelming. But at the time, yeah, TradeStation was what we used in the classroom, but that wasn't to say you had to use TradeStation, right? You could really apply what you learned on any platform, and at the time, TradeStation was just what we were using. So he says, but I sense that you avoid it almost completely now, and OTA also talks about anything but TradeStation. So I'm wondering if something happened. What is the change in direction? I guess at a very high level, we can say that there was a disagreement between the two companies, so OTA and TradeStation. There was just a disagreement on how this relationship should work. One of the things that I all would love to do, and I think this is the ultimate goal, is to have CliK in every center running live, and you can choose whatever broker you want and connect that to CliK. That's the ultimate goal from a y'all's perspective, and not force anybody to use a specific broker. Use this interface and connect it to whatever broker you want. So that's the real transition. For me personally, it's a bit different. I'm fed up with TradeStation's A, customer service. B, I am extremely fed up with their nickel and diming and charging you for everything and classifying you as a professional trader so that they can charge you 10 times more in fees. I'm like, look, I'm not a professional trader. What makes you a professional trader? Licenses, a Series 7, a 63, you're an RIA, you're a professional. You're doing this for other people as a business. I trade only for myself. I will not trade for other people, so don't even ask me. Trust me, the scammers on Instagram and YouTube and that stuff that are using my name and trying to get you to send them money so they can manage it, I will never manage anybody's money. So if it happens, it's a scam, report it. To me, TradeStation, I don't know, is just greedy and more really kind of a pain in the ass to work with. So I just stopped using them. That was pretty. That's it in a nutshell. I still think they have a great platform. I love the platform. I think they have some of the best charts out there, and I'm really good at using TradeStation. So it was bittersweet for me to leave it. I'll be honest. I actually still use it a little bit for some of my filtering because I like their radar screener and the filters they have, but I'll use that until they kick me off the platform for inactivity because I'm just not making any trades through them. All right, long-winded answer there. He says, I played with Thinkorswim and liked that, but it used to be said that what TradeStation would be better for execution and Thinkorswim might fight against you. And it's owned by TD Ameritrade, which is now Charles Schwab. So, look, I think for the most part, if you're staying with the big guys, there's two considerations. Are you direct access? If you are direct access, then you in theory are going straight to the exchanges and you're circumventing any intermediary, which of course should be beneficial to you. I guess you'll never fully never fully know what happens when you send an order through TD Ameritrade, right? Is that being passed through to the exchange or are they selling order flow? TD Ameritrade used to sell a lot of their order flow. I don't know the rates or percentages or what they're doing right now with that, but I think with Thinkorswim, you're fine. I think the area that they're really going to get you is trading illiquid securities. If you're trading SPY, QQQ, ES, futures, that has so much liquidity that they're not going to slip you on price, right? You're not going to all of a sudden get 25-cent slippage on something and be like, oh my God, I got hosed here. That used to happen on old platforms, Chris, but now I think if you're using Thinkorswim, it's fine. Bottom line is find a platform that accomplishes several things. Number one, it has to have an interface that you like. Number two, it has to have access to the markets that you want to access. That's really important. So I like multi-asset platforms that allow me to trade, futures and options and Forex and even crypto. That'd be great if I could have an all-in-one. Typically there's not, but you can find some that offer multiple asset classes. Number three is going to be fees, right? Who's got good commissions or no commissions? Number four would be, are they direct access? And for most people, I don't think that's a big factor. For somebody like myself who used to trade a very high amount, it was critical. But now I don't trade as much as I used to, meaning I'm not doing 500 trades a day. I might make 3 or 4 trades a day. I'm not so concerned about direct access anymore. Let them sell my order flow. I'm not that concerned if they need to do that. The other consideration is going to be customer service, right? If their customer service, well, first off, are you the type of trader that needs customer service? Right? There are some traders that are just downright needy and they're always calling tech support. They're always calling the trade desk, my computer this. If that's the case, then you better have some good customer service. Like myself, I don't generally call customer service or tech support unless there's a major issue that I can't resolve, and most of them I can fix. Sometimes trades get stuck. Sometimes, the account numbers are wrong. Well, make sure you can get a hold of somebody, and those are kind of my 4 or 5 big considerations for picking a platform at a brokerage firm. So there you go, Chris. Hopefully that helped. Okay, now an interesting one. Everybody in here has been in a trade situation where you've got a stop loss in or you have an order to buy and it comes right down to your order, maybe hits that thing real quick and then just rips out and either stops you out and you're the dead low. That's happened to me too many times, and then keeps going, or it doesn't fill your order, but it came right to that price but never filled you. Duh! It happens, right? So it happened to Michael. So Michael, let me answer your question here. Try to. He says, collusion or algorithm? He says, this is very frustrating as it happened to me 5 or 6 times this year. I set my stop loss and they came for my stop and got me. So I will tell you this. If you're trading, you're trading the micros, so you're in the MSE. If you're trading the micros or the S&P products, probably not going to be hunting you for a stop. I don't think that they actively hunted. It's just the nature of the beast. I think it just happened to you on this day. He said, I'll read it here so we can look at the charts in a second. No problem, Michael. Thank you for sending those questions. Always happy to help out where I can. He said, I set a stop order at 37.83 in purple. Got to the swing lows. OTA teaches after the impulse. I went to go see Top Gun. By the way, I hope you like Top Gun. Great. I may actually go see it again in the theater. I really enjoyed that movie. And all was well. But I went to sleep and they came for my stop in yellow. Why does this happen? I believe it is intentional. Do they really need my $100 that badly? It just wicked into my stop and then continued the uptrend. Here's a picture of it. So you can see you bought back here at 27.40. Great. You had this kind of sideways consolidation, so you did the right thing in my opinion. You moved your stop loss up so that if it did start to go down, you're great. Then you have this kind of listing going on late last night where it just kind of slowly came back down, and then this happened. This little wick got you out. Now, I didn't go back and look at the tape. I was thinking it might be good to go look at the time and sales to see exactly how many transactions happened at that price. I personally think, Mike, I don't believe that they were hunting your stops. Now, you also have to remember that at this time where you have this gray, the lighter gray box, this is a very illiquid time of the markets, right? It's not, there's not high volumes. Notice down at the bottom on your chart, you can see there's extremely low volume. So really, if anything else here, if anybody comes in with a decent sized sell order, which would normally be absorbed in the market, it's going to push these things in one direction or the other. And I think that's partly what happened here. You can see the volume started to tick up right after midnight here, and that may be due to some economic data. We can look at that in a second. But yeah, unfortunately, it just came right to it. Now, I have literally, this actually happened to me, I want to say last year or 2 years ago, where I had an order in. I think I was actually on S&P futures, and I was the only one that got stopped out. Like, I had my stop loss in, it came down, hit my stop loss, and I watched the time and sales, and I was the only order that was executed, and then it just shot up and did exactly what I thought it was going to, much like what you showed me here in your chart. I personally don't think they're gunning for you, right? Is it easy for them to hunt your stops in the after hours? Yes, it's easier because you can move it down with much less firepower, right? So say, for example, I'm a big trading firm and I can see orders in the system. And I notice that 2 points lower, there's a big block of stop orders. If it's during regular market hours, I might have to spend a lot of money to sell futures to push it down 2 points, take those trades out, and then rip up. But in the after hours, I can sell just a little bit because the liquidity is so much lower, and I can manipulate things a little bit easier. So I think part may have to do with the illiquidity of the after hour session. The other part is, and I'm seeing this more and more, is the way that people set their stops. So if you go out now, and I think it's kind of generally the way that the markets are built. If I go over here and show you some price charts, and let's just go, I'm going to pick something at random here. This is a daily. Let's go to something I don't look at very often. How about Ford? All right. So here's Ford. If I look at this Ford chart here, and I'll go with, let's say, intraday, and I'm an institution. Let's say I'm a big-time institutional trader. I can pretty much guarantee that there's a lot of traders who are long. They're going to set their stop loss right there, $11.50. Why? Nice whole number, $11.50. Plus, it's right before the origin of that gap. So as an institution, I know that traders are watching this gap and going, shoot, if this gap fills, I'm going to bail. So the methodology which we teach, which identifies turning points, and this is not necessarily a good demand zone, but I think we might need to widen our stops a little bit to accommodate. I kind of get the feeling sometimes that institutions know that there's a bulk of stop losses just below this level. And I think that your stop loss, if I see it correctly, let's figure out what exactly it was. You have this sideways consolidation right here, which is where you set your stop loss off of. Great. 3,783 was the low there, and then you have your stop loss about 3 points lower than that. So my question would be, is 3 points enough? So let's go check that out. How do we figure that out? You'd be using average true range. So let's go in here and go MES. What do we? They do it slightly different. So the U 2020, which is what you were in. Yep, there we go. So here is that futures product on a 5-minute time basis, and there is the period of time in question. So what I'm going to do is I'm going to add on average true range. And you can see right there, there's average true range. So when you set this stop right here, right, this is pretty important. If you're going to go out and tell me that you put your stop loss here, right, below these lows, which was right there, how would I go about setting my stop loss? Well, a lot of people would say, well, it's right below that. Well, not necessarily. Notice the ATR at that point was rough, at that exact moment where it hit that red line was 7 points. So for me, I kind of need to accommodate that. I may not need to go the full 7, but I mean, you got to know that if you're doing a 2-tick stop, which is just barely below this, let me get the numbers right here so I can use your exact chart. You were at 37.8350 was that line that you had there. So 37.8350. All right, there you go. There's that, and then you had your stop loss per your screen at 37.80. Okay. And delete those. All right, so now that's where your trade was structured, and that tail took you out. I think the stop may have been too tight based off the ATR in that range. That's kind of my point here is, when you're looking at that moment in time, the ATR, you were too tight with your stop loss. Now, granted, we'd like to be as tight as possible, but you know that the range, the way that it's moving, you're running an increased chance of being stopped out. Now, let's say you did it right before you went to the movie at 9 o'clock. Right, so you're up here, it's 9 o'clock, roughly 9 o'clock. Well, notice ATR now drifted to roughly 2.5. So I would go 3 points. So I would have a 3-point stop loss there. Just something that's slightly, I love TradeStation, something that's slightly more than the ATR. I had not considered using ATR for setting stop. Yeah, well, remember, what does ATR tell you? It tells you this is how much this security moves on average in this period of time. So, if you're setting a stop loss, the key is to not get stopped out, right? Really, a stop loss is there to protect you from taking a colossal loss or giving back a bunch of your profits. But, you also want to give it, as Pepe says, wiggle room are you going to give it. In this case, you're executing on a 5-minute chart. I'd be looking at the ATR on a 5-minute and going just past the ATR on that one. So I think that may be one way that you can modify this a little bit. Granted, your stop losses are probably going to be a little bit bigger now because you're going to be using the ATR, which may widen those stops a little bit. But, and of course, hindsight is 20/20. I'm not trying to be a cynical a-hole here, but, if you look at this one, if you just had a little bit wider stop, right, shoulda, coulda, woulda, then this whole move would have been captured. You got yourself another, 20-plus points. Another 80 points from where you were stopped out, which, of course, I'm sure you would love to have had that in your pocket. So think about that one in the future, Michael, is maybe just try a little bit wider stop. A 3-point stop loss is pretty tight. It's pretty damn tight. Let's see. Now I got a whole bunch of questions that came through on that one, so bear with me as I go back through some of these questions to figure out what was being said. It's the algorithms. You're trading against a supercomputer. True. That is very true. You are trading, for the most part, you're trading against computers nowadays. However, I don't think that the algorithm is hunting stops. I really don't. But I could be wrong. Hey, Pepe, good to see you. Love TradeStation. They have improved with customer service. Good. I haven't used them in a while. Had to call him like a month ago for my surprise. Actually pick up the phone right away. They used to, I forgot the guy's name, but I used to be very active with TradeStation. And actually there was a guy that I always requested because, you go to a call center, I would ask for a specific person and they would just transfer me over to him. And he knew me right away. And I actually got great customer service at that point. And here's another little bonus for you. If you're someone who uses a lot of customer service from one of these firms, and especially if it's the same person, stoke that person. When it comes to holiday time, don't make it a Christmas present because you don't want to be culturally insensitive, but send them a holiday gift. I used to send the guy at TradeStation a bottle of Crown Royal, and on the card it said, "Thanks for helping me be the king." And that customer service from him was, bar none, the best customer service. I mean, he was like looking forward to my call. Take care of the people if you're really using those services a lot. What else do I got? You have not convinced me that they're not top gunning for me. As I mentioned before, I'm probably the least trusting person in the financial markets. I think that everyone's out to get me, but I can't worry about that. I just got to plan my trades the best I can, and if I get stopped out on some of those, it happens. It's unfortunate because in hindsight, you nailed it, right? That was a hell of a trade. That was perfect, especially right at the open. You've been like screaming for joy here. It would have made your Friday. I know that. But unfortunately, that one little tick got you, and, it happens to us all. It's just part of it. Don't get frustrated with it. I guess what I hope I'm helping you with here, and others that are maybe in this situation, is we really need to consider what our stop losses are. Personally, I think having a 3.5-point stop loss on something that you were already up big on, right? If you bought at 37.40, you already had 40 points, 40 ticks worth of profit. So why not, give it a little more wiggle room, just a little bit, because you want to get that bigger trend. As some of my guests have pointed out, the whole goal of trading is not to have a small winner. The whole goal of trading is to start off with a small trade. If it goes against you, you get stopped out. If it works in your favor and starts to move up, great. Then you become a little more accommodative with your stop loss and widen that stop loss so that you can let this thing run. And the ultimate goal is to turn this small little 20-point winner in the S&P to like a 400-point winner or 600 or 1,000-point winner in the S&P, because you just let it kept running and you accommodated those fluctuations. Now, these markets are so choppy, good luck getting 1,000 points out of the S&P, but it could happen. Let's see. Brennan says, I bet a lot the Federal Reserve does. That happens often after hours in copper. I move my entire zones further. If I don't get in, so what? Exactly. And after hours with indexes is one thing. After hours with commodities is a whole different ballgame. I mean, because for the most part, a lot of these commodities are rather illiquid anyway, compared to the S&P, right? There certainly is volume in some of them, but let's just real quickly bring up, here's the micro futures. I'll bring up volume here. You can see during regular market hours, there's a tremendous amount of volume. But back here, when you got taken out, Michael, there was 1,500 contracts traded at that moment in time when it dipped down. That's nothing compared to the opening. We had 20 or 32,000. So 1/10 the volume. That can move markets. Now look at copper. Let me go. I'll do continuous contract. It's too timely to do the specialized one. Here's copper. Look at copper in the doldrums, in those wee hours of the morning. Actually, last night had some pretty good volume, but the day before, during U.S. equity market hours, was really flat. I mean, you're talking 27 contracts traded, 48, 50. These are really low numbers. So be careful, especially in the after hours with some of the commodities. They get very, very illiquid. I've seen SPX go down to stop me out in 1 wick. It's amazing how 500 companies can move. Yeah. I stopped thinking they're going to get me, right? I just look at it as it's a cost of doing business. It's like getting rejected, go and ask someone for their phone number and they turn you down. It's going to happen, so I'd move on. Let's see. Let me glance through these questions, see where I'm at. My pleasure, Michael. Go help it help. Eric, Merlin Oche says he uses a percent of daily ATR. Are you evaluating the stop on a 5-minute? Is that how you would evaluate your stop today as a daily average range changes daily? Yes. So again, what's your objective? If I'm a long-term swing trader, I'm not looking at the 5-minute ATR, right? If I'm a Larry Jacobson, right, and I'm buying Amazon because I think in the next year it's going to be a monster gainer, I'm might be using daily ATR. Hell, I might even be using a weekly ATR because I know I have a longer time horizon. I have to accommodate larger fluctuations, right? If I'm a short-term day trader and I'm using 5-minute charts, I can't look at a daily ATR. I have to be looking at a 5 or maybe even something smaller. But remember, the smaller time frame you go, as we go from monthly, weekly, daily, 4-hour, hourly, all the way down to a tick chart, the more you drop down, the tighter those stop losses are going to get, and the more likely you're going to stop yourself out. One of the exercises that I loved about Online Trading Academy is we would do in class, we're trading with real money. And the rules were, from an instructor perspective, we weren't allowed to let students lose more than 7 cents per share. Well, look, some guy wants to pull up an Apple chart and he's got a 7-cent stop. That's the spread. Like, you bought it, oh, you're stopped out. And then people will go home and they're using 7-cent stop losses. That's wrong. Every stock has its own action, its own movement that you have to accommodate for. So you look at ATR and say, okay, here's how much I think it's moving. The reason we did 7 cents or 10-cent stop losses in class was to create discipline. It wasn't about making a winning trade. It was about making sure that you didn't lose big. So I'd rather have you guys just have a whole bunch of losing trades in class where you stuck to your rules and every time you lost 10 cents and that was the rule, I'd give you a pat on the back and say you did great. Why? Because you didn't lose $1.50 or $5 or 10 or 20. You lost 10 cents on every trade that you made. Awesome. Great. You should be congratulated for that. Now, when you go home, you can take that discipline with you, but also you have to adjust your stop losses because 10-cent stop loss on most securities, you're going to have more stop outs than you can imagine. It's going to happen all the time. For your information, I chased it and bought back in when the consumer news came out, so I was lucky and captured. Awesome. Good. As a coach here, I would say, why are you chasing things? They work today, but that could burn you. But hey, I'm glad it worked for you. It's nice knowing you're going to go into the weekend and be able to have yourself a nice frosty beverage with a smile on your face, even though you got stopped out. That's good. I think we all know our weaknesses. The algo programs know human weaknesses too. That's true. Tom, I would actually disagree with that. I think a lot of people don't know their weaknesses, right? Sometimes we try to overlook what our weaknesses are and focus on our strengths. And I think that for someone to be successful as a trader, forget about your strengths. It's your weaknesses that are the main thing. So for those of you who haven't evaluated your weaknesses, do it. I always make the statement that if you don't know what your weaknesses are, then start trading and the market will show you, and it will show you very clearly. Would you like 137.50 on the USD JPY, a good opportunity for immediate retest long position? Let's go check out USD JPY, shall we? We finally got a pullback of the dollar index, thank goodness, a little bit. So here is USD JPY. Let's make this a daily time frame, and I will throw that line on there just exactly where you mentioned it, just so we can have your exact numbers. And you said 137.50. Okay, so there's your 137.50 mark. It's off the chart because I am way back here. Let me get this ATR off of here. We'll shrink that down. I'll get rid of volume as well. Okay, so you've got this 137.50 mark area mapped out, which I guess I should move this up because this little zone here should be tailored in my opinion. But yeah, I think that would be a logical pullback, right? Because what you're saying is I had a big move up. It consolidated for, it's only 2 days, and then ripped out. So you have a supply zone created above that, and you've gone through that. So what should happen is this supply zone would now become demand, or resistance becomes support, and you should get this pullback down to 37.50. So yes, I think it's a very logical pullback point. If we look at the Dixie today, bring up the dollar index, we were down 0.6% on the Dixie, almost an engulfing pattern. You notice I've got a level on the dollar index that's right around 106.80. So we could bump that up to, let's say, 107 just to get a nice round number. All right, I think we'd all agree that's probably a logical pullback point, right? I think everybody look at this right now would probably say, yeah, that's very logical to think that the US dollar could get back down to 107. Well, if it does, where do you think the USD JPY is going to hit? It's going to come right back down into this yellow box area. So personally, 137.50 is good, but I think you might do better and maybe even wait to get 136 even. But that's it. So there you go, Chris. Good question. If you have emotional distress in a trade, it means the position size is probably too big. True. Oh, man. I've had moments, and this probably hasn't happened to most of you, but I've had positions that were so big that I literally froze. I literally was just shaking with, fear. One of the stories that is written out in depth in the book that will never be published is a trade I had in Microsoft. And at the time, Microsoft, I believe, was $90 a share, and I ended up with 17,000 shares of Microsoft. So let's just put that in perspective here. I'm going to bring the calculator up for everybody. 17,000 shares. Oops. 17,000 shares times 90 makes that a $1.5 million trade. And some of you are going, oh, that's no big deal. $1 million, that's not that big, right? My account size at that point was about $25,000 or $30,000. So let's just say it was 30,000. Divide that by 30. I was, it was going to be 51,000% leverage. That doesn't quite make sense. But yeah, it was a very bad trade. It actually led to health issues, which I will share in the book when it's finally done. But yeah, if you ever find yourself in that nervous position where you're shaking, your palms are sweating, you're trading too big. Trading too big. Yeah, OG says, I start sweating profusely. Get that AC fired up. Bought in one fill? No. I did not. It wasn't in one fill. It was a computer glitch. I don't want to tell the story because I gotta save it for the book. But yeah, oh man, now you're making me sweat thinking about it. That was one of those stories. It was just a technological problem. Man, what a nightmare that was. Important question. What am I drinking today? My Bib and Tucker 6. It's a bourbon. My friend Carrie bought it for me. So cheers to Carrie. He is an awesome programmer at OTA. There we go. Enough of my net worth is in crypto that it doubles as a stress management exercise. You've been really stressed out lately, Brendan, because that thing we've seen some pretty big pain points there. All right. So I think I got through all of Michael's question. Michael, thank you for sending that in. Again, for those of you who want questions answered, I'm no oracle. I don't know where the market's going to go, but we can always evaluate things and come up with a hypothesis and a plan and act on that. If you have something you want me to check out, put your comments down below the YouTube videos. That's the best way. I take those, put them right in the slide deck, and I'll just scroll through and get to those questions answered on the program. Sometimes I forget, but I usually answer the YouTube ones first, so put them down there, or just email me at TraderMerlin@gmail.com. All right, what does Eric say? Do you still consider trades on the hammers, shooting stars when price crosses? No. So or wait for the reopen and trade only the regular trading hours. So if I have a second, let me see. I'll have to draw the picture here. So I'm not so concerned with the hours or the trading hours. So if it's aftermarket, fine. It's just I find that these things work a little bit better during regular market hours because you tend to get the gaps, right? And if I'm looking for something to open lower below a line, a lot of times I need that gap. So let me share, do some drawing here real quick if I can find out where I'm at. And I will put a new slide right there. Okay, and I will draw for you. So there's a couple rules with this, especially with hammers and shooting stars. And it's a great question when you look at kind of after hours trading and things like that. Here is the screen. Let's say you have, daily price has been drifting down, and all of a sudden you had, this giant hammer, or by the way, this is what's called a dragonfly doji. This would be technically a hammer pattern if this is all red in here. But either way, they're all tell you basically the same thing. So my rule, which I've explained to you guys, is you go to the high of that candle, draw a line across it, and if it opens up somewhere down here, anywhere below that line, and then moves up above it, great, there's your long trade, which pretty much what happened today, right? Great one. If you look here, what happens if it opens up here? Let me get some of these other lines off. Where's my eraser? There's my eraser. Get rid of that one. Get rid of that one. And that one. So what happens if it opens up there? All right, the next day you got a gap up and it's right here. To me, it's a no trade. Because what I see happen all too often is it opens and then it does this. It comes right back down. Now, I think what you're asking me, Eric, is if it does this and then comes back up, is that okay? The answer is yes. If it comes back down below it and then goes across it, I'm okay with that as an entry. But if it only the one time, if it does this and then forget it, it's useless and dead. So that's how I approach it. I don't know, Pepe. I don't know. We're not sure how that one will go. Options are very new for me. I was looking last night at selling a call, 415 strike price for SPY, going through the OTA motions over the weekend. What do you think? Selling a call? Yeah, I never sell naked calls either. 3 million that buy my book, Michael. I wish. Wouldn't that be great if 3 million people bought my book? It'll be 3 people that buy the book. That's what's going to happen. So let me just quickly bring up, you had that trade there mentioned, the 413 strike. So personally, I'm not going to be selling naked unless it's a cash secured put. So I will always have the cash in hand. That's what I do in my 1% account, is I'm just selling puts. If I get exercise like I'll get exercise on my silver today, then I will manage that trade. So let's go SPY. And you basically sold the call at 415, which not a bad spot. I mean, if it does have a rally, that's probably where it's going to be going. Now, you're not in extreme danger here, but you collected some premium. You sold the call here, which means if it gets above 415, you're going to have to come up with those shares. So if we get a big rally and it just starts ripping and all of a sudden you're at 460, you're going to be responsible. You could be upside down quite a bit on this one. So that's the only risk, in my opinion, of naked calls. Fortunately, SPY is rather diversified. So if you are going to sell naked calls, then an ETF is probably a safer way to go. Don't do it on an individual security, because you could have a gap up where it jumps, like, let's say, 50% gap up. Oh, well, you're probably going to be broke on that one trade. So definitely a red flag for me is selling naked calls. I don't like to do it. In this case, I think you're probably fine. You probably didn't collect that much premium, right? But sure, if this does rally and we do have a cup and handle, or we do have a ascending triangle, or at least strength building here, and we get above, let's say, 392 on SPY, then it's probably going to go to 415. That's a logical point for it to run to. So great. And if it gets there, most likely it's going to have a turn back down. So I think the trade in itself is fine. It's just there's a risk component that I personally am not comfortable with, which is if it gets above 415, I have to come up with those shares. That's the challenge. Hopefully that made sense, Dave. Let's see. It was good last time. Indexes move with much more predictability than individual stocks. 100%, Brendan. Absolutely. I mean, hell, look at if you were in something like, Facebook or Snapchat, and getting whipsawed with these massive sell-offs, but the indexes are slowly drifting down. I think that as an individual who wants to make a living trading and generate consistent rates of return, stocks are kind of dangerous, or individual securities. I think one of the beautiful things about indexes is precisely that. S&P 500, I have 503 companies in one basket. So if one of those goes bankrupt tomorrow and the other one gets, upgraded and has a cure for cancer and goes to $50,000 a share, it's not going to impact the overall basket that much. So you're not going to get these crazy gap ups. Listen, if the S&P gaps up 50% overnight, something happened, or gaps down 50%, something major happened, and you're probably not worried about money anymore, especially if it gaps down. So stick with the indexes for everybody. Depending on your options trader status, they might not let you sell naked. Correct. There's four levels? I think there's 4 different levels for options that you have to qualify for each one. So yeah, make sure that you qualify to sell naked calls. Naked call is like the last level. It's the highest one. I only invest in stocks and don't trade them. Cool. That's fine. I have actually shifted more and more. I am more in the ETF side. I'd rather buy, if I feel the market's trending up, I'll go buy S&P or the futures products or sell options against indexes. And as you guys can see here, the major ones are all the different S&P segments. Down here at the bottom, my S&P sectors, this is pretty much my long-term investment stuff, plus my option strategies are based off of these, including the ETFs for the markets, right? Meaning QQQ, IWM, DIA, and SPY. Okay. Great questions. How much time do I got? Oh, I'm going to wrap things up. I want to go have some fun. I'm going to see Cool and the gang tonight. Can't wait. I saw them last year. They were actually pretty good. Of course, probably one living member of Cool and the gang. The rest are all gone. That said, let's go look at your economic announcements for mañana, or for Monday. Here we go. Economic calendar for Monday does not have a lot for the U.S. The only thing we have, which I think is actually very, very interesting, is TIC long-term purchases. This is really telling us how much bonds and equities the U.S. is buying of foreign products and how many foreigners are buying U.S. products. If we see a huge influx of money coming back into the U.S., that again could potentially be a driver for prices to the upside. So we'll keep an eye on that TIC long-term purchases number. That's coming out at 1 p.m. East. Does this Pacific? Oh, I always forget. I always switch back and forth. I think that this is Pacific since I did it on my home computer. So that's at 1 p.m. Pacific time. Markets will close right about then. Other than that, not much to speak of with regards to economic announcements, but we do have, I didn't put it on here? Are you kidding me? Sometimes I amaze myself. I'm always in such a rush to get this show going. I want it to be flawless, and lo and behold, I screwed up, I think. Oh, it's hidden, that's why. Let me unhide that slide. There it is. So, more fun for Monday. Again, bank stocks have had mixed reviews. We've had JP Morgan and Morgan Stanley disappoint significantly. You had Citibank look like a star. Well, Bank of America, Goldman Sachs, and Schwab will be reporting on Monday, as well as Synchrony Financial and International Business Machine. So a lot of big stuff going on there with regards to earnings announcements for Monday. Let me see a last minute couple questions here. Only naked puts make sense to me. It's much better to do spreads or counters. I agree. I just am not versed in spreads and counters, but I love selling options. You guys know. Options are my favorite. Okay, I didn't place it. I talked myself out of it. Cool. And look, Dave, I'm not trying to talk you out of it. I think that anything that you get yourself into, and this is not just trading, this is life, always look at whatever the risks might be in front of you. And when you look at something like options, you can put yourself in an extremely risky position. I like to trade because, as I mentioned, it's SPY. So you're diversified there, you're probably going to be okay. But if this was something like Apple or Google, which, by the way, did a 20-for-1 split today, so Monday that will be 1/20th of the normal price, which I'll be looking at as a potential short opportunity on Monday. Individual securities could absolutely burn you in a horrible way. So be careful selling naked calls on individual stocks. Stick with the ETFs. What else do I got? Can't wait for 27-20. Yeah, that's going to be so great. Bring it on. Bring on the Fed announcement. Wear my MAGA hat to the concert. One thing I definitely try my best not to do is be political. One side or the other. Stay in the middle of the road. Don't make enemies along the way. You guys all have your beliefs about one thing or another. I respect your beliefs and opinions, but I'm not going to force mine on you. Let's see. Have fun and have good. Yes, I will. I'm going to have a great weekend. MMT, what do you think about JP Morgan as a long-term trade? That's a tough one, And the main reason I say that's tough is if you look at JP Morgan, we analyzed this one yesterday. That trend is just ugly, from what, 175 all the way down to 112 today. What do I think of the big picture? Well, let's go weekly here on Morgan Stanley. Long term, I got to say this looks like it's coming to a pullback and a buying opportunity. Right? We marked this out yesterday. Right around 103 would be the origin of this gap that happened back on November 2nd of 2020. If it got down to 103, I got to say I might be a long-term investor as well. Do I sell some puts at at $100 here and collect some premium and be happy owning? Yeah, maybe. JP Morgan obviously is in a world of hurt right now. Rising rate environments historically help financials. I say that with an asterisk because we've been raising rates and financial firms have been getting slaughtered. It has not worked this time. So, is JP Morgan Chase going to go away and be a bad bank? No, they're the king out there right now. So I do think long term you're probably doing okay, especially when you look at this trend. It's been pretty strong. I would argue that this is a logical pullback. I'd love to see it get to 103. If it gets to 103, I'll probably buy some. I didn't get an alert. No to JP Morgan. Stop eating sugar and grains. What do we get in a nutrition show? Brendan, what do we get? I'm doing my part. What do you say? Stop eating grains? Stop eating sugar and grains. Well, see, I had some sugar in this glass, but I used a fermentation process to convert that sugar into alcohol. See? Thinking ahead here, Brendan. All right. Excellent. Yeah, dividends are good, but you know what, MMT? Personally, I'm a bitter cynic when it comes to dividends, right? I've had people tell me, I've got this stock, and it's a great company, and they're paying me 3% dividend. I look at the price chart, I'm like, it's down 50%. Yeah, but I'm getting a 3% dividend. But it's down 50%. So I agree with you that it might be, I'd rather own it at 103 or 112 than 170. But could it still go down? Sure. JP Morgan, right now, everything is looking fairly weak. I do think you're going to see a bounce in the equity market. So, I go long JP Morgan. Just make sure you have a stop loss. Get down, get funky with the Cool Gang. Yes. You know what? It's so hot, but I think I am going to wear something pretty funky. I've got some pretty cool stuff. Why is the rum gone? Rum goes quick. This is whiskey today. But anyway, guys, that's going to do it for me. I'm going to wrap up. I hope you all have a fantastic weekend. Go do something fun. It's going to be a sweltering heat wave, I guess, for pretty much everybody in the country, right? I know Texas is in triple digits. I'm going to be hitting 80 here this weekend in SoCal. So hope you guys have a fantastic weekend. Good to see everybody. Brendan, good to see you again, my friend. Hope you're doing well. That said, I hope you guys have a great weekend, and I will see you all on the Monday show. If you got questions, put them in the email to TraderMerlin@gmail.com or down below the YouTube video. I'll see you guys on Monday. Take care, everyone.